in Forex trading. Good day, welcome to Forex Farm GH. In today's topic, we are going to look at risk management in Forex trading. And under this topic, we are looking at lot size, leverage, concept of take profit and stop loss, trading plan, and common mistakes made by traders. Risk management. We are starting with lot size. Lot size is the quantity of a trade a person buy or sell in the market. It is sometimes called your position size or trade size. In forex market, currencies are not bought and sold singly. They are bought and sold in packs called lot size. That is what makes the gain appreciable. Now let us look at types of lot size. We have standard lot, mini lot, and micro lot. Standard lot. Standard lot contains 100,000 units and represented on MT4 by 1.0. Mini lot contains 10,000 units and represented on MT4 by 0.1. Micro lot contains 1000 units and is represented on MT4 as 0.01. Now example, let us assume we have three traders, trader X, trader Y, and trader Z, that deals in clothes. You know, for them to make profit, they can't just buy a single pair of clothes from the wholesaler. They need to buy these clothes in bundles for the profit made to be appreciable. Those bundles are what we call lot size. Assuming trader X buys 100,000 bundles of clothes, trader Y buys 10,000 bundles of clothes, trader Z buys 1,000 bundles of clothes. That's 1,000 bundles of clothes. You would agree with me that trader X would make more money than trader Y, who will in turn make more money than trader Z. What determined how many bundles of which they bought is the capital they invested in the business. That is a typical illustration of lot size. In the illustration above, that's the illustration we did earlier. Trader X bought standard lot size, which is 1.0. Trader Y bought mini lot size, which is 0.1. Trader Z bought micro lot size, which is 0.01. Now on the picture at our right hand side, lot size is what we have circled with the red color. What we have circled with the red color, that is the lot size. You can see on the left we have plus 0.01 and plus 0.1, and on the right we have plus 0.01 and plus 0.1, and on the left we have negative 0.01 and negative 0.1. That is the lot size where we have circled with red. Yeah, that's where you can indicate your lot, where you input your lot. Okay. Pip equivalent of each lot size. Now standard lot size, one pip of standard lot size is $10. Mini lot size, one pip is $1. Micro lot size, one pip is 0.1. If three traders trade a currency pair and three of them made 80 pips, let us say trader X traded one standard lot size of pair, he will make 80 times $10, that is $800. Trader Y traded one mini lot size of the pair, would make 80 times $1, that is $80. And trader Z traded one micro lot size of the pair, would make 80 times $0.1, that will make $8. Now, so even though they still participated in the same trade and the market moved in their direction for some for same amount of pips, their profits were different because the amount of that particular currency they bought was different. That the lot size that they used were different. That's why profits their profits were different. So you see the difference. Okay, on our right hand side on the screen you can see account balance, lot size and maximum positions. Now this is my personal lot size I use for my accounts. That's my different account that I trade. I have about several accounts, and this is how I trade them. With 2000 to 3000 accounts I trade 0.30 to 0.40 lot size, and I open a maximum of 2 positions. That's how I do it. So you can see how I have done mine, and you can do your own differently, or you can copy it and you use it. But this is mine personal one that I use. Okay, now let us look at leverage. Leverage is the ability to use something small to control something big. In the case of Forex, using a small capital base to control a larger lot size. To understand this concept of leverage, let us take a brief history of how Forex was initiated initially. Initially in Forex, it is not anyone that was allowed to trade Forex, just as we see currently in New York Stock Exchange. Forex were only traded by people we call them cabals, men of Wall Street, usually investment banks, rich men, monarchs, big businessmen, company owners, etc. They were the ones that were trading from the Forex market. Let's take New York Stock Exchange for example. For you to trade in the floor of New York Stock Exchange, you should be making a specific amount of millions of dollars per annum. You shouldn't be owing any mortgage. Your tax documents are up to date with so many criteria. This is how it was in Forex then. Men like you and me wouldn't have benefited from this lucrative business. During the invention of the internet, the world became a global village in that you can buy and sell from anywhere around the world. This led to the proliferation of forex brokers. Forex brokers had so many customers around the world that they would solve that single problem of capital for us. World banks, etc., requires a certain amount of money for someone to be able to trade with. But because brokers have pooled many amount of money together, we are now allowed to trade through our brokers. Instead of an individual trading with $1 million, you can actually place a trade with as little as $10 because you didn't go alone. You went to the market through your broker, who is recognized by the World Bank as a formidable force because it has a large capital base. Your broker allows you to trade because he offers you what they call leverage in the forex market. The principle of leverage is visually multiplying the little capital you have so that you can use it to buy something worth a bigger value. Remember when we were filling out forms for the demo account registration, I asked you all to fill leverage as 1 is to 500 or 1 is to 1000, etc. That we did it in our first video, that was, you can remember when we were filling out forms for the demo account registration. I asked you all to fill leverage as 500, 1:500 or 1:1000, etc. Now you can check that on our video with the introduction to forex trading, and our second video, that is MetaTrader MT4 interface, the explanation one, into bracket explanation one. Okay, let's move on. Let us assume you have $100 in your forex account. Normally $100 wouldn't have been able to place a trade in the forex market, but because your broker gave you leverage, let us assume you chose a leverage of 1:500 for that $100 capital. You can be able to place a trade of $100 times 500, which is $50,000. So you are virtually controlling trade of worth $50,000. That is what makes the profit we have in forex appreciable. Now let us look at concept of take profit and stop loss. Take profit and stop loss are forms of market orders. On the image at our right hand side, take profit is indicated with the yellow TP, that is on our right hand. On the image you can see yellow TP at our right hand, and we have stop loss is indicated with silver color SL, that is stop loss. Okay, as a trader you would not always be online monitoring all your trade. It is not as if we forex traders just get a seat and stay in front of our laptops all day. Some traders may stay overnight, some may last for 2 days, and you may have something to do as well. You even have your work to go to if you are a worker. Take profit is a form of market order that tells your MT4 to close your trade for you and lock in your profit when your trade moves a certain number of pips in your desired direction, even if you are not online. Remember, in forex we are always doing two things: buying and selling. Let's take a scenario when we are buying and give an example. Let us say you entered or want to enter a currency pair, that is AAA against BBB. It is currently at $40, and from your technical or fundamental analysis you found out that it would soon rise, and your target for this trade is just 50 pips. For you to set a target profit at 50 pips, you add 8 to the price you entered, which was $40. So your take profit would be at $90. That is $50 is 50 pips plus the $40. Anytime it starts climbing and reaches $90, even if you are not online, your MT4 app would close the trade for you automatically using your take profit and adding the $50 profit to your account immediately. So that is how take profit works. Once you set it at that particular price on your MT4, whether you are online or not, it closes the trade for you and locks your profit. Let us now open our MT4 to see where to set our take profit on it. Take a look at on this image, the image on our right hand side. Take a look at Euro GBP. It is at a currency, it is at a current ask price of 0.8659. That is Euro GBP ask price. On our right hand side you can see 0.8659. Example of a buy trade. Now we are coming to input in take profit and stop loss for buy trade. Assuming I want a take profit of 40 pips for a buy order placed on it, it would be at 0.8698. we got this answer by adding 40 pips to the ask price of example of a buy trade. Assuming I want a take profit of 40 pips for a buy order placed on it, it would be at 0.8699. we got this answer by adding 40 pips to the ask price of 0.8659. Note, we are using the ask price because we are buying. Remember our lectures on bid and ask price. You can search for that video on YouTube, that is MetaTrader in bracket MT4 interface in bracket explanation on. We would have used the bid price assuming it was selling. Now we got to now we go to our MT4 and type in 0.8699 at take profit and buy the currency. By clicking on Euro GBP, that is EUR GBP currency pair and new order, it would now bring you to this page where you would input in your take profit and stop loss. If you have anticipated that the market will move up by say 40 pips and you will not be online to close your buy trade, so on the image on our right hand side, this is where you input in take profit and the stop loss. The take profit is at our right hand side and the stop loss is at our left hand side. Okay, you add that 40 pips to the current price and MT4 will do that job for you when the price reach there, though you wouldn't be online by then. The small box circled at the right hand side pointed at by the right hand arrow is where you input in your take profit, and the small box circled at the left hand side pointed at by the arrow is where you input in your stop loss. For now we are discussing take profit. When you are buying, you set both take profit and stop loss, and when you are selling too, you do the same. We shall look at how to calculate them. They are opposite each other. Using the Euro GBP example we gave earlier, at 0.8659, and we added 40 pips to get 0.8699 for take profit. To calculate for stop loss, we will allow 15 pips for stop loss. Hence, calculating for stop loss, we will subtract 15 pips from the Euro GBP original price, which is 0.8659. So calculating for stop loss, that is 15 pips equals to 0.0015. that is, you can also check that on our how to calculate for pips, that is the MT4 interface. Okay, we did the lecture on that, so let's come back. 0.8659, that is the the current price of the Euro GBP minus 0.0015 equals to 0.8644. After getting the take profit and stop loss, you input them at their places on the image on our right hand side. Then you click on buy at the bottom right. The MT4 would take profit and close the trade once the price hits your take profit. If in case a news breaks out when your take profit has not yet hit and your trade starts going against you, your trade will close when it hits stop loss and close the trade where your account will be secured and stop it from making more losses. So this is how take profit and stop loss for buy trade works. Now we have to move on to how to input take profit and stop loss for a sell trade. Example of a sell trade using the same Euro GBP 0.8659. Assuming I want a take profit of 30 pips for a sell order placed on it will be at 0.8628. We got this answer by subtracting 30 pips from the bid price of 0.8659. Remember, on our buy trade we used ask price, and on our sell trade example we are using the bid price. Note, we are using the bid price because we are selling. Now we go to our MT4 and input 0.8628 as take profit and sell the currency. By clicking on Euro GBP, this is the page that we see. That's the same page that on our buy trade we saw is the same thing. So it would now bring you to this page where you would input in your take profit and stop loss. If you have anticipated that the market will move downwards by say 30 pips and you will not be online to close your sell trade, you subtract that 30 pips from the current price, that is the bid price, and MT4 will do that job for you when the price reach there, though you wouldn't be online by then. So you can see that in our buy trade we added the take profit pips, and on our sell trade we are subtracting the take profit pips. Okay, now the boxes that you can see, the take profit box is the same like the buy trade, and the stop loss box is the same. Okay, for now we are discussing a sell trade. Remember, in our previous example we discussed a buy trade. Now we are discussing sell trade. When you are selling, you set both take profit and stop loss, and when you are buying you do the same. We shall look at how to calculate it using the Euro GBP example we gave earlier at 0.8658, and we subtracted 30 pips to get 0.8628 for take profit. To calculate for stop loss, we will allow 20 pips for stop loss. Hence, calculating for stop loss, we will add 20 pips to the Euro GBP original price, that is 0.8659. So you can see that in this stop loss, in the stop loss for a sell trade, we are adding the stop loss pips instead. So stop loss calculation, 20 pips equals to 0.0020. So the workings 0.8658 plus 0.0020 equals to 0.8678. After setting the take profit and stop loss, you input them at their places on the image on our right hand side. Then you click on sell at the bottom left. The MT4 will take profit and close the trade once the price hit your take profit, and it will do the same when the stop loss, when the market goes against you and hit the stop loss, it will close it and secure your profit for you. So this is how take profit and stop loss for sell trade works. This is how take profit and stop loss work for buy and sell trades. Now let us move on to trading plan. In everything you do in life, you need a plan. There is a saying that when one fails to plan, when one fails to plan, you are planning to fail. So that is why you need to write trading plan before you kick off your forex trading. Take note of that word written. Next is that you need to follow this plan judiciously. Never try to adjust it to suit your present market condition or biases. Most traders neglect this vital aspect of forex. Also, while forming your plan, it needs to be smart, specific, measurable, achievable, realistic, and time bound. You need to factor all the above into consideration. I will share with you all my personal trading plan that I normally give my students. This plan should be like a guide so that you can use it to form yours. It must not be exactly like mine. However, it is just a guide. Trading plan. I would earn 100% of my trading equity in 1 month. I would set a near-term goal and make at least 25% of my trading capital in 1 week, and I would plot this target daily. Number 3. If I am behind my trading plan for the quarter, I will take a brief break to re-evaluate my trading system. Number 4. I would not trade more than 3 markets per day. That is more than 3 currency pairs. If I have more than 4 losses trades in a row, I would take a trading break for 2 days to reassess the market. Number 5. Anytime I take a break, I would close losing trades and set protective stops on a winging trade and take profit at reasonable target should I be unavailable and market gets to my target. Number 6. I would record my daily trade activities in my trading log and review them weekly. Number 7. I would know my ratios, results, and would work to improve on them by at least 5% per week. I would invest 4 hours a week to update knowledge on forex and learn new trading strategies. While forming your plans, especially your target, make it realistic. Depending on your capital, because I set my target at $100 per day, or another person set his or hers at $500 per day, does not mean you have to also set yours to the same amount. That should not influence yours. Always make it realistic. If for a start you make $30 per day, believe it's a good start. For a lesser capital of $100 to $200, you can set up your target at $30 or $40 per day. In a week, my brother, that is $150 to $200. The main aim of forex in this early stage is to support your normal expenses, something to make you not depend on salary alone. If you can hit your target of 150 in a week, in a month that is 600. With this, you can support yourself and your family. Whether you are in school, doing a day job, or into business, it is an additional source of income to everyone. Then, as you now grow in Forex, you can increase your capital, hence increasing your daily target. A time would come that you wouldn't depend on your salary again for anything. Next is that it is important to always review your plan. If you look at the second point in my plan, review it weekly. That is at the end of the trading week. Check your transaction history for the week. Have you achieved 1/4 of this plan? Where are you currently and what part of your target is remaining? That would influence your trading for the upcoming week. Maybe if you are few dollars behind your target and you analyze only 2 currency pair last week, you might add 1 currency pair this week to make it 3 and maximize your profit. Maybe if you are a few dollars behind. Another important aspect of the plan is once you have reached your target for the day, always close and go and rest for that day. The cash flow would still continue tomorrow. Forex market has been around for decades, so it won't close that day. Always take your bow off when you reach your target. Notice that I always close immediately I reach my target. Another important principle in life is to learn from people mistakes. So now we are moving on to common mistakes made by traders. That is our last topic in this video. Okay, never wait to learn from your own mistakes. Those that have gone this path ahead of you will tell you this are what people have done which didn't yield positive result, and hence you should modify your own action. So I would be highlighting some of these mistakes so as well all should be wary of it. Number 1, the first is not having a trading plan, which I have already highlighted above, of the importance of planning your trades from daily to weekly to monthly. Next is trading for too long. Paper trading is same as demo trading, even though it is good to demo trade, but don't dwell in the fantasy world for too long. Get into real market and trade to analyze with your emotions on the line. That makes you stronger. Dwelling in the fantasy world would make you feel relaxed and you wouldn't learn because you would always say to yourself, it is paper money. That is the number 3. Not using a stop loss. Always remember to put it in all your trades. Technology has made it there to protect your account. No matter how good you might have analyzed the market, you may not know when a major news would be released and it could change the direction of the market. That is why it is always good to look at the economic calendar before the beginning of every week. But by setting your stop loss, no matter the news, whether it is against your direction, you would be protected. Number 4, opening so many trades. You would see someone open GBP USD, Euro USD, USD JPY, USD CHF, AUD, USD, etc. Tell me, how can you monitor all these trades? It all boils down to greed. Never open so many trades that you can't monitor. It tends to distract you and divide your concentration. I always limit myself to 3 currency pairs per time. That is my maximum. This is a very common problem. In fact, it is the most common mistake and will cost you a lot if you don't learn to control your greed. I used to open many positions at the same time in my early days of trading, and it made me lose. I used to open many positions at the same time in my early days of trading, and it made me lose a huge amount of money at that time. With $100, you have to at most open 3 markets or less. Even if you analyze another market and you find out that market is a perfect sell or buy, don't enter unless you have closed one of the previous trades you have opened before you enter a new trade. Okay, so we are done with our topics. On our next video, this is the topic that we'll be treating: how to know when to actually buy or sell. Now we are getting into how to actually buy or sell, how to generate signals for yourselves, indicators, moving averages, that is the 7 and 14. Now look at moving averages, 68 and 200. That is 7 MA, 7 moving averages and 14 moving averages, how they work, and 68 moving average and 200 moving average, how they work. So you can search that video. The name is that next video is moving averages in bracket 7 MA, 14 MA, 68 MA and 200 MA. Thank you very much. Click on the subscribe button to subscribe to our YouTube channel, and you can also join our group on Telegram, that is Forex Farm GH. Thank you very much, and comment also. Bye.